Gold is pristine. Gold is real money. And so when people are convinced that the dollar's status is safe because the euro is not ready to take its place, or the yen or the pound or the RMB, they're overlooking the obvious alternative, which is gold. You don't have to back your currency with dollars. You can back your currency with gold. Gold is your primary reserve. It's a lot better than a currency because it's not simultaneously somebody else's liability. You don't have to worry about being sanctioned because if you own gold and you've got it in your vaults, it's yours. Can't be sanctioned by the United States. And you don't have to worry about money printing. You don't have to worry about deficit spending. Gold's value is going to be maintained. This is what's happening. The world has woken up. They don't want to play this game anymore.
In a powerful reflection on the global financial landscape, economist and market strategist Peter Schiff highlights a truth that's becoming increasingly undeniable. Gold remains the ultimate form of money. As confidence in fiat currencies wavers, the world is slowly remembering what real value looks like. He explains that while many investors still measure safety by comparing the US dollar to the euro, yen, pound, or yuan, they're missing the true alternative, gold. Unlike paper currencies, gold isn't anyone's liability. It can't be printed, devalued, or weaponized through sanctions. When nations hold gold, they hold independent sovereign wealth, value that doesn't depend on another country's promise to pay. In today's shifting monetary order, more countries are realizing they no longer need to back their currencies with the US dollar. They can return to gold-backed stability, insulating themselves from the inflation and debt that plague fiat systems. As Schiff points out, gold's worth endures precisely because it represents trust, permanence, and freedom from financial manipulation. The world is waking up, slowly stepping away from a game of endless printing and into one of tangible value. Gold isn't just a relic of the past. It's the foundation of what's coming next. If you found this insight valuable, like the video, share it with others and subscribe to the Metal Bar for more deep dives into global finance.
China's got the factories. They've got the infrastructure. That's the important part. And it's much harder to save money than to spend it. Spending is the fun part. You just go out and buy stuff. Savings is a sacrifice. It's under consumption. It's earning money, but then not spending it, finding ways to get by with less so you could save more, right? So that takes hard work. Spending money is very easy. So to think that we are the important part of this relationship because we borrow and spend. No, talk about putting the cart before the horse. China produces. Without production, there's no consumption. China saves. Without savings, there's no borrowing. There are more of them than there are of us. There are 3 times as many people in China. They can spend. They can, there's no shortage of demand in China, but there's a huge shortage of supply here. We don't have the factories. So if there's a war, China wins. In fact, China's been propping up our economy. Trump doesn't understand that, and neither do a lot of people in his administration. There are people who believe Bitcoin is digital gold. I believe they're wrong. I don't think it's digital gold. I think that's the meme that you use to market Bitcoin, but I don't think it's any more digital gold than an image of a hamburger would be digital food. Sure, it may look like real food, but you can't take a bite out of it. You're not going to get any calories. If you have a diet of digital food, you'll eventually starve to death. So it's not going to work. I think Bitcoin is going to implode at some point. Now, it's continued for quite some time, and it's gathered a lot of disciples, a lot of believers in this. And so when you're buying Bitcoin, you're making a bet that more people will believe in it in the future than who believe in it now. And you have to really believe that nothing is something. And to the extent that you could believe that, you may buy Bitcoin. And if more people believe it, then more people will buy it. And the people who own it will be able to sell because there'll be new buyers that want in. But, you never know when people are going to wake up or they're going to run out of fools who are willing to buy into the concept. And then eventually the people who are believing, a number of them stop believing. They see the light, they wake up and then they want to sell. But if there's no new buyers, then the whole thing implodes. So I would not buy Bitcoin if your goal is just to have an inflation hedge, to get out of the dollar, to protect yourself. It's more of gambling on group psychology. Yeah, a lot of events could happen that may drive more people into Bitcoin, right? High inflation, a dollar crash, more people could be seeking a safe haven. And if they end up seeking that safe haven in Bitcoin, then Bitcoin can go up. But they may not. They may come to their senses and Bitcoin can crash. But I think gold's not going to crash. I mean, I think gold really is what Bitcoin pretends to be. And so I'd rather just buy the real thing or buy silver or something else that's tangible or invest in the gold mining stocks. I think they're going to go up a lot more than gold. I think they're even cheaper than the metal. So there are a lot of ways to play the gold market. I would not include Bitcoin as one of them. In terms of gold, the stock market has actually declined quite a bit, right? If you measure it in terms of real money, which is what gold is money that the Federal Reserve can't create out of thin air. And so its purchasing power is going to be maintained. In fact, gold's purchasing power goes up because prices are supposed to come down. That's how capitalism works. We come up with more efficient ways to produce things. We develop economies of scale, and prices are supposed to go down. And if you measure prices in real money, they do go down. It's only when you're stuck with a fiat currency created by a government that we experience rising prices. You know, the reason that gold is around $4,000 an ounce is foreign central banks have been buying gold instead of dollars. So instead of holding dollars and then buying U.S. treasuries, those dollars, they're selling their dollars and buying gold and just putting the gold in a vault. And so that makes it more difficult for the U.S. to finance its debt because we have to find somebody to buy it. And we're going to have to pay a higher interest to encourage people to buy it based on the risk of inflation and dollar devaluation. But we can't afford the higher interest rate because the amount of debt that we're financing is so large. So that's why there's going to be a lot of pressure on the Fed to finance it. But when the Fed finances it, it has to create inflation to do it. And so the trade-off is, yes, the Fed monetizes debt to keep rates lower, but now inflation pushes the price of everything higher. And those higher prices are just a disguised tax, right? Because if the government takes my money, then I can buy less stuff, right? So they take my money in taxes, I got less money, I buy less stuff. But if instead of taking my money, the Fed just prints money and spends it, now prices go up. I got the same amount of money, but I can't buy as much stuff. Now everything costs more. So I'm buying less stuff. So the government is taking my purchasing power either way, right? So inflation is just a hidden tax. And, you know, the government likes it because it's hidden, right? Most people don't connect the dots between rising prices and government spending. And so they don't realize that when they go to the store and they pay higher prices, they're actually paying a tax.
In this sharp and candid discussion, economist Peter Schiff explains how the global economic balance has shifted and why the U.S. is on the losing end. He points out that China holds the real power through production, infrastructure, and savings, while the U.S. relies on borrowing and consumption. Without factories and tangible output, Schiff warns, America's economic foundation is hollow, a house built on credit. He draws a stark contrast between saving and spending, noting that savings require sacrifice and discipline, while spending is effortless. This imbalance, he argues, makes the U.S. dependent on China's productivity. In the event of a major conflict or financial rupture, Schiff believes China's industrial strength would prevail. Turning to Bitcoin, he dismisses it as digital gold, calling it an illusion propped up by belief rather than intrinsic value. Comparing it to digital food, he says you can't sustain yourself on something imaginary. In his view, Bitcoin is a speculative bet on psychology, not a store of value. Gold, on the other hand, remains the real deal, tangible, finite, and inflation-proof. Schiff sees it as the foundation of true wealth and the only enduring hedge against currency devaluation. Let's get into the interview.
And Trump doesn't just say it's booming, it's the strongest in the history of the country. So that means it's the biggest boom, right? It's bigger than the Roaring '20s, right? It's never been this good. And he says it's the hottest economy in the world. So it's the strongest economy in the history of America, and it's the strongest economy in the world. That's inconsistent with demanding that the Federal Reserve slash interest rates. But it's also inconsistent with the public. I just saw yesterday, Donald Trump's approval ratings on the economy, just on the economy, are the lowest they've ever been. That includes his first term. I think he's got about a 33% approval rating on the economy. 60% of the people disapprove of his handling of the economy. Now, if the economy were doing great, you would figure that more people would give him credit for it, right? I mean, usually whether the economy is good or bad, even if it's got nothing to do with the president gets to blame if it's bad, and he gets the credit if it's good. And so if the public is saying they're unhappy with the way Trump is handling the economy, what does that tell you about their personal experience of the economy? Right? The economy is not doing well, and that's why they're blaming Trump and saying, I don't like the way he's handling the economy. If we had the strongest economy in history, then Trump's poll numbers should reflect that, right? The people should be, overjoyed to be experiencing this massive economic boom, and they should have confidence in Trump because they should be crediting Trump for this boom. After all, Trump says that before he was president a year ago, we had the worst economy in the history of the world. Now we have the greatest economy. And so if there's been such a massive transformation of our economy in such a short period of time, you would think that the voters would be rejoicing or the people who are being polled, the public, and they would be giving Trump credit for this miraculous, turnaround, going from the worst economy ever to the best economy ever in just a short period of time. Silver, looking very good here. I think it's still even cheaper than gold. It's around $48 an ounce. I think that's a good value. It got as high as 54 and change just a couple of weeks ago. 50 used to be the double top. We've now taken that out. So I think we've got a lot of upside in silver. We don't have that big resistance anymore. We've already pierced it. But you can buy real assets. I mean, I like foreign equities. We buy a lot of good dividend paying foreign stocks that I think are going to, throw off really good, real returns, both dividends and capital appreciation for clients. So, we invest in a lot of stocks. I manage mutual funds that I think will do very well. People can get information on all of my funds, which can be bought no load at a discount broker at europac.com, or you can talk to our representatives about setting up an account with me for us to manage here.
In this segment, economist Peter Schiff dismantles the popular claim that the U.S. economy is in its strongest period in history. He points out that despite bold declarations of record-breaking growth, public sentiment tells a very different story. Approval ratings on economic performance have plummeted, reflecting the real-life struggles of ordinary Americans who simply aren't feeling the so-called boom. Schiff argues that if prosperity were truly widespread, the people would be celebrating, not expressing frustration and doubt. He highlights the contradiction between political optimism and economic reality. How can an economy be booming if the majority of citizens disapprove of its management? Schiff warns that the illusion of strength may be masking deeper structural problems: rising debt, weak production, and financial fragility. Yet, amid this uncertainty, he sees opportunity. Silver, he notes, remains undervalued and poised for growth after breaking past key resistance levels. He also emphasizes real assets and dividend-paying foreign equities as practical hedges against inflation and dollar decline. As always, Schiff's message is clear. Look beyond the headlines, protect your wealth with tangible assets, and prepare for what's next. If you found this insight valuable, don't forget to like, share, subscribe, and comment below with your thoughts on the future of the U.S. economy.